And good morning. Friday morning, April 11th, 7 a.m. So just first is try to make as quick as possible trade review for yesterday. Yesterday was good. A lot of these reason I've been making a lot of money lately is just these great trends, wide trends, wide trading ranges. And at the beginning of a uh, new environment, in this case, I'm talking about the market selling off and the volatility, market being weak. You know, at the beginning, it can be a little tricky. Then you have a period where it's a little bit easier. You've got first and second retracements. I mean, you got hitting bottom and you got some wide ranges that come from that. And it's been really helpful to get up in the morning with the European session. And a lot of these trends start at that time. So just for example, I think we had a long position. We made some money here. I think we made a little bit of money here on this breakout. There's just volume and a lot of movement. And of course, this is hitting bottom. This was Monday morning. But even up until that point, you know, I mean, you have these flushes down and it doesn't bounce. You know there'll be shorting opportunities. And for instance, this bar out here. So here's 2, 3 in the morning, um, which is usually around British time, and you just sort of it's sort of moving its way down, and you just jump on, and then this continued. The market opens. It Europe, they seem to know that the U.S. market's going to open soon, so they cover shorts. We just have this continuation of the day. So there's opportunities here. Then you get these wide ranges. Um, I missed out on most of this because I was taking lunch with my sister. But I'd made money in the morning already on some shorts. I think this short here. Um, and then yesterday. So yesterday, just we'd had this big rally, and when things like that, they're so shocking that people are afraid to short sometimes. But it's incredible to me the amount of money our exchanges hands and how quickly they adjust to current conditions. And you know, this was the dead high, and you come in. Look, we're still here, and this is 3 a.m. here. I caught almost this whole move, and I think this was maybe I was short here, and I had to wait a while, and I was all nervous I was going to come back and make retracements. And yesterday, I mean, I think I literally covered near the bottom on most of the positions. Now, of course, I'm looking at the Nasdaq, and then since then we've had this back and forth, and it hasn't really been tradable, but I haven't been paying attention. You know, I got out. I got out at a really good price, and I just sometimes I'm impatient. So it's this sell-off here. Yesterday I think I made 40,000, and actually maybe 20,000 of that was in the stock market, and didn't make anything in the metals. Lost a little bit in copper, lost a little bit in silver, because gold was rallying so hard. But gold rallying really hard is a symbol that I think we're okay for now. Like it's not going to crash right now. Um, and we've been doing this sort of thing. I drew this tool here. This is called a pitchfork. And you can see you're supposed to put the pitchfork at the major turning point, and then first and second retracements here. And it's supposed to follow this channel. and they say that if it sometimes it'll come here and pause and make a little note halfway, and then once it breaks through, it goes more quickly, which is I find to be fairly true when you're range trading. It's real choppy at the beginning, and then you get some sort of a really strong rally with the last part. But it didn't go all the way down. I was watching this thing and I thought, well, it's supposed to come and test down here. And it just, every time I start telling me those sort of, myself those sort of things, I'm almost always wrong. And in this case, I wasn't. I just got down here. Um, but anyway, it's a nice tool. It's just another thing to look at and help. But the way the other slipped, so yesterday, copper, so 2,000 shares per bar. This is yesterday, and yeah, I was shorting it here 3:30 in the morning, but I think I was like, I shorted it once it broke here. It was all right for a little while, but it just started moving against me, and so yeah, I lost money. I covered some more here, and then maybe it came back, but it's sort of ticking higher. This overall is still very weak, you know. If you look at the daily, this is obviously a weak chart, and it's probably a good shorting area, but it wants to churn, and we can't wait for it. Silver's not that different. That major low Monday, and this is silver. So I made a trading video a couple days about gold, and I'll talk about that in a second because everything I said was right, but the environment was wrong, and gold's just been taken off, and I missed it. Missed pretty much everything. I made maybe $5,000 yesterday. I said it was going to go down, and it was going to float around and reset, and then go higher, and it just shot up. And that was a mental mistake of mine because actually that was more predictable, but talk about that in a second. So right now, so the account yesterday, here's your loss in copper, silver almost flat, but there's so much strength in gold. So the gold I made 34.80. I was probably up 10,000 at one point in gold, and I was really late to the party. And the only reason I bought it because I kept telling myself, well, we're going to reset before we shoot through the highs. Of course, I was wrong about all that. Um, but as they were moving up, I thought, well, at least I'd have some gold on if I'm going to be short copper and silver, at least as a hedge. Those are the weaker ones. And it turns out I ended up making money in the gold and losing money in the other. I took an $18,000 loss in Australian dollar. Wrong about that. I put on a pretty good size position, not a full size position, but just didn't expect it. I expected it to act a little bit more like copper and silver, but you can see it's all the way back in this range now. So the chart yesterday though was a little bit more like, you know, shorting it in this area. But Australian dollar actually had a different chart pattern. The others weren't doing this. This is a new high. The others were not making new highs, so that was a mistake on my part. I shouldn't have been buying this. It's making new highs. If you can see the difference between this leg up, this strong move we had, and then hardly any retracement. Um, whereas if you look at a chart of, this isn't going to be as good a context, but well, this was a new high, I guess. Hopefully they're short this morning. Sorry, I'm talking about yesterday. There we go. I gotta change the time frame here. That's only 2,000 contracts, so always have to change these because all these contracts have different volumes. So to get the right context, I've always got to keep changing the amount of contracts I'm looking at. So that's one annoyance with using these amount of volume per bar, but Anyway, but yeah, this came down a lot. Um, but the Australian dollar had came down and had made a new high. So here I am shorting this. And it just wasn't the same pattern. I should have been aware of that. That example, but the other thing that was crude oil. It seems like it hasn't. It's been a little bit strange. Like it just went down, and there was no. It just seems like such an easy trade. Crude oil was going down the whole time. All the trades has just been so easy that it hasn't. It just didn't really bounce in a lot of things. You can see this one on that one crazy day, but you don't see in any of these. You don't see much retracement down, sideways. This is the only example. That was the whole market, but you just until yesterday, and it just was failing to go down and acting like it had been before. Um, but I got out of it, and I did got my 10,000 out of it, but it might have been up a little bit more. The stock market, so Nasdaq 12,000, S&P 500 15,000, but the big winners, if you look at the softs, 14,000 in coffee, 8,400 in cocoa. Cocoa I shouldn't have even been trading, but it was just I gapped out. I had my thesis. I shorted it. And it didn't go down a lot, and it's good I got out, but it went down a little. So I like for an example, that was 28,000 contract per bar for crude oil, and then I can go 500 on cocoa. It's such a thinly traded market, which is why another reason why you have to trade it a little bit differently. But if you look at cocoa, so. Yeah, I shorted it here on this day. So this daily bars. I made a little money coming down. That's the $8,000. So it did this gap up here. I had a good price. Came down, and then I had to sit through some difficult times, but it came down here, and I got out at a decent price, maybe 81.30, somewhere around here. Right out before it went back up. But look, this is not a downtrend now. It wasn't as weak. Whereas coffee is sort of like coffee's, still I ought to be short this, but coffee didn't have that sort of balance. I was shorting it up here, and it sort of stayed down here. And I stayed short one contract. That's the only thing I stayed short overnight. And I put a stop in, and sure enough, I got hit. And there's only made 1,400 on that one little contract. But I took a full size position. A lot of these, the stock market, I took a full size position. Maybe three contracts in the S&Ps and one contract in Nasdaq. So you can see S&P here is at 15,000, so that's why there's a good profit there. Three contracts in S&P and one contract in Nasdaq, and almost made as much in Nasdaq as did S&Ps. So, um, but yeah, Australian dollar just took it higher and higher and higher against me, and I had a good position. But that's also a clue that things are turning. Gold was a clue that the market behavior is turning, and now that it's appearing to be turning, it's why it's a little bit, I think, quiet, and I'm not inclined to make any trades this morning. But total profit so far 212,000. So the idea is you come in here 1, 200, 1, 2, 3, and update this, and then you get a different amount of contracts, which is considered a full size trading position. Which of course with the volatility they've been letting come at some of these. So for instance, when it was $1 million Australian dollar, it said trade 67 contracts. Now it says you can trade 80. And that's how you become wealthy is you just over time you just increase the size as the size of your account increases. Your risk profile as a percentage is the same, and you just it's a finance principle of compounding interest, so to speak. So anyway, yeah, there's not much to say. I did my daily homework today, and there's this gold breakout, and then you got all these currencies breaking out to the upside, all this monetary stuff. I am much more interested in silver and corn. Finding a spot to buy these. Here's the daily chart in soybeans. So this is sort of like, I mean, this is not different from the gold chart, except the gold has a long history of rallying on the daily chart. But the recovery, the V bottom of the recovery just shows that, it's a liquidation event. Remember, we were talking about corn and how corn wouldn't even go down. It didn't even liquidate with everything else. And look at it. It's even this, I mean, this part too, but this is outperforming soybeans overall. Soybeans and corn share acreage, and farmers rotate between the two depending on the price and various other things. I think maybe they get subsidies for ethanol if they turn their corn into ethanol, or who knows what subsidies they get. But they have to generally trade because it's an acreage thing. It's profit per acreage that farmers are looking at. But once they've made their decisions on planting and they've committed to it and they finish with planting in May and so on, then they've made those commitments and they can switch. Like if there's a drought or problems with the corn crop, soybeans they plant slightly later. So then they move into soybeans. Um, but sometimes soybeans can get the much bigger rally later in the summer. But you can always switch into corn if the soybean doesn't work out. So soybeans, if there's a weather problem, soybeans will rally later in the year. But coming into the growing season, they both sort of rally anyway. And that looks like that's going to be one of those years. So anyway, so on the gold, you know, uh, uh, what I was talking about, the other day, like how to trade gold, was for regular time period. I said, okay, it's come down so far, it's going to need to set up before it goes higher. And that's in regular trading environment. And I should have foreseen this. This totally could have foreseen this because we're not in a regular trading environment. This is a liquidation scenario. And so you get these V bottoms, and that's what happens with the market leader. And, when the stock market's doing, most traders and investors don't like to short things. And they just like to buy things and own things and just hold. And so what'll happen is as that rotation, they rotate, okay, stocks aren't doing well. What's doing well and gold's doing well. And so over and over, gold gets more and more people on the bandwagon, more people jumping on board. So it's just going to continue to outperform everything. And sometimes it'll get pretty crazy. So here I am looking for a buying opportunity, and I missed this big move, and I should have known this was a big move. It was going to happen overnight, and of course I was getting a lot of signals. And look at the euro, and it's pulled back now, but sure enough, and I've been buying it in here and waiting. It wasn't doing anything, and then you miss out on this big trade. But this way, in this choppiness, and I'm glad I didn't sit through this. It would have been annoying, but when they're ready to go, they're ready to go, and now I'm behind the curve. But now I'm sort of going to be looking for a retracement in gold, and that might not happen for a little bit, for a couple of days. And most of everything else that's been weak, it's oversold, and so it needs to turn around a little bit. So, yep, quiet day. Checking out.